In 2025, the average home price could be 3 times your annual salary. How does that sound for your dream home? In this video, we'll uncover the truth behind home affordability in 2025 and what you can actually afford based on your salary, even with rising costs. Stay tuned till the end for a surprising revelation. Imagine you're in your dream home. How much salary would it take to actually afford it? Drop your guess in the comments and let's find out if you're close. 1. Setting the stage for 2025 housing market. Home prices are rising faster than inflation, and salaries aren't keeping up. How much of that dream home can you really afford? With interest rates and inflation climbing, home ownership seems more out of reach for many. But is it truly impossible for those who earn a solid salary? In 2025, many potential buyers are wondering whether they can still afford a decent home. Understanding how to calculate affordability based on your salary is key. It's all about finding that perfect balance between your income and your dream home. Let's break it down. The dream may feel distant, but with the right steps, it's closer than you think. 2. Key factor, income to housing ratio. The 30% rule is something you've probably heard about. But is it enough in 2025? Many financial experts say your monthly mortgage payment should be no more than 30% of your monthly income. But in 2025, that's getting harder to stick to. With housing prices soaring, even this guideline may no longer be realistic. Use this guideline to calculate your home affordability, but be prepared to make adjustments based on where you live, the price of homes in your area, and your long-term financial goals. Take the case of a buyer in Los Angeles. Despite a 6-figure salary, they were still house hunting in lower-priced areas. It wasn't about what they wanted, it was about what they could afford. When it comes to housing, your income might be enough, but your location could limit your options. 3. Impact of interest rates on affordability. Higher interest rates equals higher monthly payments. But what does that mean for you? In 2025, mortgage rates are expected to remain high. Even a small increase can change your payment by hundreds of dollars per month, making homeownership even less affordable for many. Before buying, consider getting pre-approved to lock in the best rate. Also, explore adjustable rate mortgages if you plan to stay for a shorter period. Experts predict that the market will shift. It's important to lock in a low rate as soon as possible. Interest rates can make or break your affordability. The key? Lock in now before they rise higher. 4. Credit scores and debt-to-income ratios. What's your credit score saying about your future home purchase? A strong credit score can save you thousands, while a poor score might make home buying an impossible dream. In 2025, lenders are stricter than ever, and credit scores can make a huge difference in the loan terms you receive. Focus on improving your credit score and reducing debt to boost your home buying power. Pay off high-interest debt and consider consolidating your loans for better rates. One buyer's credit score raised by just 30 points and dropped their mortgage rate by 0.5%, saving them hundreds monthly. A small change in your score could save you thousands. Work on improving it now. Work on. We're halfway through! If you're finding this video helpful, hit that like button, share with a friend, and subscribe for more insights on making smart financial decisions in 2025. Let's dive into how to overcome the affordability gap. 5. Local market variations. Location, location, location. But not just for real estate value. It's also key to what you can afford. Different cities and states have varying housing prices. Even with the same salary, what you can afford in NYC may be different than in suburban Texas. It's all about location. Use tools like Zillow's affordability calculator to determine how far your salary will go in different locations. Consider relocating to a more affordable city if your dream home feels out of reach. Think outside the city. Sometimes the best deal is just an hour away from the heart of things. Down payment and savings strategy. Saving for a down payment isn't what it used to be. In 2025, most first-time buyers are looking at a down payment of 20% or more, which means a huge savings goal. The days of 3% down payments are long gone for many markets. Start small. Automate savings and consider cutting back on non-essential expenses. Even small savings add up over time. One buyer saved $500 a month for 2 years and had enough for a 20% down payment on their home. It's all about consistency. The earlier you start saving, the easier it'll be when the time comes to buy. 7. Unexpected costs of buying a home. There's more to home buying than just the purchase price. Closing costs, maintenance fees, and property taxes add up quickly. Don't forget about insurance either. These additional costs can increase your monthly budget significantly. Factor in at least 3% of the home's price for these costs. Plan ahead to avoid surprises, create a buffer in your budget. In 2025, expect these additional costs to rise along with home prices, especially in high-demand areas. Plan for the unexpected to avoid a financial shock after purchase. What's the number one mistake buyers make when budgeting for a home? Many people overlook long-term affordability, focusing only on their monthly mortgage payment. But that's just part of the picture. Ensure you have room in your budget for emergencies and future life changes. Factor in rising costs for maintenance, insurance, and taxes. Don't buy too much house. Buy the house you can grow into. To summarize, affordability is about balancing your salary, credit, interest rates, and down payments. Do your research, budget carefully, and don't rush the process. You don't need to break the bank to own your dream home. In our next video, we'll dive into the pros and cons of renting versus buying in 2025. Don't miss it. Final disclaimer. This is not professional advice. Consult a qualified expert as needed.